All right, so what is my view on the 2014 global economic prospects? I'm going to break this down nicely. A slow global growth to see only moderate rebound in 2014, faster increase in public and private investment, and policy reform to drive productivity can counter long-term slowdown. The main results: global growth of gross domestic product, adjusted for inflation, will only rebound moderately from 2.8% in 2013 to 3.1% in 2014. As the world's major economies still face many structural flaws and policy constraints that hinder more investments and faster productivity growth, we'll see that across mature economies, the 2014 growth outlooks improved somewhat to 1.7% growth in 2014 compared to 1% in 2013. The slight uptake is largely due to the Eurozone, which is expected to return to a positive growth rate of 0.8% coming out of recession for the most of the previous 2 years. The US is the second largest contributor to the somewhat better outlook for 2014, where growth is expected to increase from a dismal 1.6% in 2013 to 2.3% in 2014. GDP growth is emerging, and developing economies as a whole is projected to drop slightly by 0.1% to 4.6%. This is primarily driven by China, which will continue to slow down from 7.5% to 7% in 2014. As the structural and policy challenges continue to weigh on China's economic transformation, that is. Among the other emerging markets, India, Latin America, and other developing Asia are to witness a slight growth improvement up from a weaker growth performance since 2013. In the medium term, the outlook for the US and other mature economies remains slightly more positive than in previous years, as these economies still have some way to go toward closing remaining output gaps. The US will therefore grow at 2.4% on average per year, and the Eurozone at 1.3% from 2014-2019, that's expected. Emergent and developing markets is more dramatic, obviously, as China, India, Brazil, and other matures from rapid investment intensive catch-up growth to a more balanced growth model. The structural speed limits of their economies are likely to decline, reducing emerging markets growth from 4.3% on average per year from 2014-2019 to less than that. Emerging markets constituted just below half of the world GDP in 2012 when converted to US and purchasing power parities, up from about 1/3 of 2000. In the next decade, this shift will continue at much lower speed. As emerging markets by 2025 are capturing half of the world GDP, with China clearly being the largest economy in the world. The upsides for the medium-term growth outlook for the global economy are a more significant, faster increase in public and private investments and the acceleration in the economy's reform agenda to accelerate productivity growth. We have to take a look at a couple of charts for these scenarios, obviously. And that being said, thank you.